Welcome everyone to the Realty Debate. The headlines all of last year and the year before have been focused on the financial rough weather that real estate companies have been facing. From accessing bank credit to getting PE monies to paring down debt in their books, it's all made news. So we were fairly excited when the tide turned around a little bit towards the end of 2012. The Realty Index bounced back 30% or so on the stock market. India Ratings, a Fitch company, came out with a report at the start of 2013 saying that the outlook for the realty sector has improved a notch from negative to stable. But right then, bang, we got another piece of news. A Bangalore-based real estate company defaulted on interest payments on debentures. Which brings us to this debate and the big question today. What's really going on when it comes to financing for the real estate sector? Does the environment remain as challenging as ever, or have things started to look up? My guests today, Pranab Dutta, Chairman Knight Frank India, Sunil Mantri, Chairman Sunil Mantri Group, Sunil Rohokale, Managing Director and Chief Executive Officer, ASK Group, Anil Sharma, Chairman and Managing Director, Amrapali Group, C. Prabhakar, Director, Gopalan Enterprises, for a perspective on what's happening in south of India. Chaudhry, Chief Executive Officer, Fire Capital Fund, to tell us where they're putting their money or how much are they putting. Samir Jasuja, Founder and CEO of PropEquity. So there's a lot of data that we'll keep flashing as this show goes on. But I'm going to toss this question to Sunil Mantri first up. Sunil, what's up? What do you think is happening? Do you really think that the balance sheets are improving a little bit and the worst is behind the real estate companies when it comes to cash flows and debt?
Manisha, I think if you see 11 and 12, it was really challenging for the developers. There are basically 2 or 3 main reasons for that. Not too many banks were funding to realty project. That's the first problem. Secondly, not too many private equity deals have come into this market, or whatever the deals have come, they were quite expensive. So that was another challenge to developer. Third one, the various permissions and getting the clearances from the various ministry, municipal corporation was a big challenge. For example, environment clearances, municipal approval and so on, high-rise committee clearances and so on. So that has obviously delayed all the developers' project by a year to 3-year time. And in between, the repayment with the bank started. Bank said, fine, we have given a 2-year moratorium and 2-year payment time. You please pay on time. Whether you get the environment clearance or not is not our subject. So I think all these problems have combined together. And on the top of that, not too much funding happened to this sector. If you see the banking record last 11 or 12, I think hardly any limits have come into realty sector because of higher provisioning norm, their attitude in a negative way for real estate industry. The complete control of the limit for the realty sector was completely controlled by the CMD of the bank, of the nationalized bank, big nationalized bank, so that hardly any limit could come to this sector. And that has created a real tough time for all the developer to get funding or getting their project going on in a speedier way. The money for completing the construction work was not available in enough quantum, and obviously sales at couple of centers were low, and all these challenges developer has to face in 12 and 13, which has started right from 2010. I think that's a real issue for the real estate sector.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.